Bitcoin prices climbed above $60,000 for the first time in 2 weeks, raising prospects that the cryptocurrency would keep rising into the new quarter after closing the previous one almost 100% higher. Nevertheless, analyst Robbie Liu noted that the recent Bitcoin rally has resulted from overheated retail action. The OKX researcher highlighted rising premiums for the quarterly contract BTC USD 0625 that jumped from $3,000, or 5.7%, last Friday to its current $5,200, or 8.7%. The level was almost the same last month when Bitcoin had established an all-time high above $61,000, following the rise in premiums of the funding rates for perpetual swaps, which began to rise mid-week and have now reached over 0.15% per 8 hours, explained Mr. Liu. These figures are certainly entering a more dangerous range. More clues for an imminent downside correction came from Bitcoin's margin lending ratio. In retrospect, it is spot market trading data showing the ratio between users borrowing USDT versus borrowing BTC in USDT value over a given period of time. This week, it fell from 9.5 to 8.2, which indicated that leveraged spot traders are beginning to unwind their positions after securing profits. The latest rise in the Bitcoin market indicated stabilization after a strong upside rally earlier this week. Traders grappled with the prospect of Joe Biden's new government spending plan worth $2 trillion. They also took cues from PayPal's decision to add a crypto checkout option on its legacy platform and Morgan Stanley's SEC filings that showed the investment banking giant revealing that it might allocate 25% of its institutional funds portfolios to cash-settled Bitcoin futures and Grayscale Bitcoin Trust.